Greetings, everybody. This is Jeff Scott. As you can see down here in the lower right-hand corner, it's still Saturday, but it's 11:16 p.m. Obviously, at this point, futures are not available. Let me pull up my PowerPoint somewhere in here. I titled today Markets at Critical Support, and actually it's tomorrow's date, but by the time I post this, it will be Sunday. I don't know why it's doing that. Display settings. All right, that should work. All right. This disclaimer is for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I paid for all the tools that I use, and trading involves risk. You alone are solely responsible for any decisions you make. I entitle my education Always Be Your Own Guru. We just finished 2 programs. One that I was a secondary speaker for George Lee in Vegas, and then I did my annual Palm Beach event. Thanks again to all that attended, all those both live and online. Hopefully those that were online next year can come live. We had a great time going out for dinner and hanging out together. My influences are here: O'Neill with Can Slim, improved by Morales and Catcher, Taken to the Computer by Ian Woodward and Ron Brown, George Lee, great trader who I share the podium with often from Canada, Van Tharp, the king of position size and money management, Cigar from Superior Profits, got some great tools that I use now, and John Person, a friend, mentor, author, trader extraordinaire. These are a couple of his books, and I do a lot with his indicator sets. I have a lot of different programs. I need TradeStation or Thinkorswim, probably both, because unfortunately it's not totally duplicated on the tools that I use. HGSI is my analytic product, and then I use EdgeRater and then some seasonality. For highgrowthstock.com, HGSI, you go to highgrowthstock.com. They have a free trial with no credit cards. In addition, they have a section for investing strategies. You'll see a number of videos from myself and others. Well, you know, it's pretty certain that we are in the land of fear. The question is, are we at a bottom, or do we have a lot more to go? And I'm going to show you why that's an especially important decision today. You have to know where you are for your stocks, your industry groups, the markets, and this is a tough part of the market. In fact, since we are down here, I am mostly buying puts, selling calls, shorting stock, and buying contra ETFs. Bear call spreads, you know, it's putting premium in my pocket and it's safe. But reality is I'm trying to play to the downside with the 4 things below it. You can see how the markets ended on Friday here as a very down day, and just pointing out that the only green is in utilities. There was some green in metals, but I'm not sure that the way this is broken out, which is the major sectors, is going to show you that. Really a very dismal day and a dismal week. If we go and take a look at the major markets, and hopefully this is still, pause it for a second. As you can see here, these are the major indexes, index futures. Let's just go down here and open up. Here we go. I'm going to look at 1 year to date, and I think you'll see sort of where the problems are. We peaked in January, peaked again here in September. Our bottom on the E-minis was in October, and if you kind of set your bar in this area here, you can see that we have sort of had a W that failed. We brought right down. So we're sitting on support. So I guess kind of, sort of, are we sitting, for example, are we sitting in a bit of a Darvis box? And do box very well, did I? And a break below this is going to be difficult, or are we just going to play the box and say it's a time to buy? I'm very concerned here, and this is the E-minis, and a break below this line. There's nothing down here anywhere close to protect me, so I think that we've got some concerns in the market here, to say it, put it mildly. This is the E-minis. I look at the NASDAQ futures, let's do it on the same full year. You could see the peak occurred here in early October, and a similar pattern where we are kind of down in the same support area, although we haven't come down as low. A reversal here would be nice, but it might, I'm not convinced. I'm concerned. Notice the 50 crossing below the 200 there on the NASDAQ. A death cross also occurring on the E-mini. If I look at the Dow futures, we don't have a death cross yet. And frankly, sometimes when I look at death crosses, the markets have already sold off a lot before that happens, and maybe it is kind of before the market recovers. But you could see again, we keep pounding out a Darvis box pattern with a low around 24,220 and a high in the 26,200s. And where did we close at? We closed at 24,433. So we're right above. Hold on a second. 24,287 was the low. So we are right in that same range as I showed you on the E-minis. If I look at the Russell, this is the weakest of the bunch. It has broken through the bottom. Now, where does the Russell go from here? I think there's risk. The VIX has popped up and is closed up at the higher part of its range. When the VIX is high, it might be time to buy, but I really think this point around, we've got some significant risk. And then the dollar softened a little bit over the last couple of days as the Fed started talking down interest rate hikes, and that probably has impacted some on the metals, which we're going to look at. So this would be the daily charts, and if I just quickly throw up the weekly charts just for a quick gander. They don't look nearly as bad, but frankly, we've broken down below the 50 weekly across the board. Does that mean the next stop is the 200 weekly moving average or the 1,000 day? That's still quite a big drop. So I'm concerned about this market, and you should be as well. And this is coming from somebody often accused of being a perma bull. All right, did this again. Display settings, swap presenter view. Oh, why it's doing that. Rates signal weakness, that's a question mark, but notice that both the 10-year and the 30-year have fallen below these lines that I've drawn for years as being where the market seems to suffer. If I look at the yield curve, you can see we continue in the blue line and move towards a flat line before you get an inversion. This is the 210, which is more the classic inversion. I believe the 2.5 was talked about a lot this week on CNBC. You could see the yield rates coming together, and you can see the turn down of the S&P 500 in pink. AD lines. Now, the interesting thing is the mid cap and the large cap AD lines kind of held up this week despite the market selling off. So that's kind of a positive convergence. It'll be interesting to see if it's meaningful. If you look at the NYSE, you can see it did roll over, but it didn't take out its prior week, a couple weeks ago low, yet we got lower on the ETFs. You can also see the TLT has turned up. The breadth, stocks above the 200-day, stocks above the 40-day, not to its lowest, but have fallen to oversold levels, and the 3-month new high, new low also getting near oversold levels. The daily McClellan, I guess is this a positive divergence where the summation index has moved up despite the market moving down, as well as on the weekly. Maybe, we'll have to see. Current buckets, 83% of the stocks are below the midline in S&P 1500. You can see we've got nearly 30% of the stocks in the S&P 1500 are below their lower Bollinger Band. Yes, we are getting near a point that markets like to rebound. I've gone back through for the last decade or so, and I kind of mapped out when we get to the extremes what usually happens, and the market usually turns. Now, the problem is in a bear market, it can get a whole lot more oversold, and this dates back to October of 2008, which probably was, that was ESPN, a time to go long the market, if anything else. And you could see on October 3rd, we had over 40% of the stocks in S&P 500, 1500 below, 50 on the 6th, 70% on the 7th, and then it started, and then 70% again on the 9th, and then the market started to turn. So even though this is pretty oversold, it's oversold for a bull market, but if we're in a bear market, things can get a whole lot worse. No HINDYs, no surprise, you got to have new highs, not just new lows. And point out on Thursday, on the NASDAQ, we had 13% new lows, and on the NYSE on Thursday, we had 19% new lows. So new lows overwhelming new highs. Market tone, we had kahunas on Tuesday, Wednesday was off, and Thursday to the downside. And you could see we've shifted from a bullish to a bearish posture. If we look at the sectors, no surprise, the only green will be in utilities and real estate. Canaries in the coal mine, well, I'm pretty convinced they're in a downtrend right now, and that's not good for the market. And we're going to have to break above this downtrending line before I'm going to believe. And, maybe we get lucky here. Maybe this is a higher low, but right now we're in a downtrend, and that's not good for the market. So this is an old slide. This is from Ian Woodward. May he rest in peace. Ian did give me permission to use his slides, and I always like to mention where they came from. If you see the three little colors there on a white background, anytime I do a presentation, pretty likely it came from Ian. Now, what this presentation looked at was a same group of people picking stocks monthly and looking at 1 month and 2 month return, basically 20-day and 40 days over a 15-month period of time, a decade or more ago. And the message here are two things. Number one, in a strong market, you get a great return. And the same people picking stocks in a weak market did very poorly. And that between 1 month and 2 months in a weak market, things can get worse. And also, in a strong market, things may soften. You want to take your profit. So, where are we today? We're either mixed weak or weak. I think we're weak. You have no business going long stocks right now unless you know something or there's a special story. I mean, yes, you can go long gold, REITs, and utilities, but be careful. And it's, holding positions without put coverage right now is dangerous as well. Now, I've been using Q a lot, especially intraday. And I'm going to see if I can maybe get Cigar to talk a little bit about some of his tools. He's got some indicators that I use, but I just like some of the visuals. You can look in pink or whatever color for 1 day performance, where the only positive market on Friday was utilities, and look over the last 5 days, and you could see that 9 out of 11 groups were negative over 5 days, with real estate and utilities popping up. If we look at rank the sectors by the last 5 days, you can see utilities and real estate are the leaders, and they've been the leaders for quite some time. Staples, again, defensive plays. Now, what was interesting is the biggest move or the biggest pace on Friday, 1 day, was energy and materials. So it'll be interesting to see, I think, led by gold, if that continues. If I look at the NASDAQ 100, which was down 330 on Friday, you could see that the AD line, 99% of the stocks are down, and over 5 days, 93% are down. And if I look at the S&P 500, minus 2.33 on Friday, and you could see 91% down on the AD line, and over 5 days, still 87%. This is a weak market with the least resistance, I think, going down versus turning around. Know your news and your earnings. News has been driving this market constantly. This is from Econoday. The reference is here. Yes, they're advertising their investors journal. What's key here? PPI, CPI, petroleum reports, jobless claims, retail and industrial production. A mixed bag. Let's see if there's any Fed heads speaking. I didn't see any. No Fed heads. All right. So low to medium impact news. And then my statement here, I continue to live by. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. As you could see, we're getting near the end of the earnings cycle. It would be interesting to see if Peak Resorts has anything good to say, because talk to some friends out in Colorado. They've got a ton of snow already. So ski season is in fuego. So thoughts, really a rough week for the markets, with indices down from 4.5% to 5.6% on the week, with half of those losses coming on Friday. News continues to drive these markets. China trade war, Fed yet now signaling a pause, yield inversion on 2 to 5 has had a recession to come, falling bond yields. What does the bondholders, the smart money, know that I don't know? And death crosses throughout. Markets are at critical support as they retest November lows. They are at the bottom of the range. A bounce is possible, but a break below these levels likely leads to something worse despite seasonality. And now is not the time to be all in. I've taken off profits, been playing contra ETFs in the short side while doing put protection on my remaining positions. I have not been initiating new longs. So you might expect that we're not going to spend the whole day talking about buying stocks. Oh, God. Only imagine what this video is going to look like. All right. So, stay. All right. So, a couple things. Let's just look at my trade station and take a look at where we are with some of my things. Let's see. We have E-minis. You could see 5 or 6 things. We look at the person buy and sell signal, sell in the daily, weekly, and the monthlies. We look at the color of the bar. Red means you should be shorting or holding, not initiating new longs. We got that on all 3 time frames. I look at the presence of any suggestion of MACD divergence or convergence, the red dots above or green dots below. And you could see after having some MACD divergence, the market sold off. I look at where am I on the auto envelope. When I get far below, I know it's time to bounce in. We're not there yet. I look at my high jump bar, make sure it's not up above 90, it's at 17, and all my bongos, daily, weekly, and monthly, are red. Weak, weak, weak. NASDAQ. It's broken record, not going to say much, looks pretty much the same. Dow. The same. Let's add a blank row, put our T1 at, take a look at the Russell futures. Interesting, these are the ones that have been probably performed the worst, and we've started to get a MACD positive divergence dot. So these things are weak, no shocker, be careful. Look at some of the sectors. Materials, weak, but interestingly, still on a weekly in a buy signal. Excuse me, that's not materials. Yeah. Here's materials. Here is energy. Here are finances. You know, oversold with MACD convergence on both the daily and the weekly. Industrials, weak. Technology, weak. Staples, again, some MACD convergence popping up here. Still on a longer term, staples are positive, but weak. Utilities, probably the only thing in a buy signal, and you can see how overbought they are with divergent signals coming in both daily and the weekly, and at 100% on the high jump bar. And you know what happens when you're at 100% on the high jump bar. You don't stay there. Maybe this is a week the market bounces, utilities come down. Healthcare, selling off on Friday. Discretionary, weak. Let me add real estate, strong, perhaps the strongest one we see it. Bothered by the red dots, it's come off the high jump bar, everything is green. So as you can see, real estate, utilities are where it's at, and maybe staples are getting ready to bounce. What do they all have in common? Yeah, they're defensive plays. Uplifting, isn't this? Let's keep going here. Take a look at HGSI from a top-down perspective. I usually go to market analysis groups. I look at major markets plus. As you can see, I've got 24 things I look at. I put a T1 on it. And lo and behold, when is the last time that gold was at the top of the list? This was defensive, man. Gold miners, treasury bonds, gold, silver. Volatility up at the top can never be good. And notice where your indexes are down here. So it's easier for me to manipulate this than TradeStation or Thinkorswim. Let's just take a look at what we see. Here's the S&P 500. Let's go to a little cleaner view. So, I was so excited when we got the lovely Phoenix that occurred down here. I think I see but notice what we got the rest of the week. We've got kahunas. We had a Phoenix and a kahuna to the upside occurring on this day. We got 1, 2, 3 good days, Gravestone Doji, and the market sold off hard, and we've had 2 Phoenixes, including a very strong Phoenix. Now, this might be a sign of an oversold market, and you may have exuberance to the downside. But as I showed you before, you got to respect the charts. And I look at these charts and I see boom, and I didn't want to do that, so let me see if I can kill that. Back here. Somewhere in this area, we are in a box, and a break above would certainly be bullish, then a retest and a breakout, and then we're home fine. But what about if we break below, retest and fail, and then we break down? And if I had to put my bet where I think we end up going, this is where my concern is right now. So I have to be concerned about the downside. I'd love to see a bounce here. Yes, we're oversold. We held pretty much the November lows, October lows, November lows. We're going to bounce. I'd love to say that and believe it. And I think it's very possible. But I've got to be concerned about what happens if we don't. And if I look at the Dow Jones Industrial Average, I hate to just repeat the same thing. Oops, wrong entity. Same basic. Come on, Jeffrey. I shouldn't be doing these at midnight. I should be sleeping. If I do this now, I can play golf twice tomorrow. All right. And you can see we're in a Darvis box there. Remember, the Eurekas and Phoenixes occur on the major index, the NASDAQ or the NYSE, and they will be the same no matter what I put in the middle. So that's the Dow. If I look at the NASDAQ, same story, 280 at the top, down here is the bottom. If I look at the Russell 2000, it's broken through the bottom. I think the Russell's in danger right now. And will that pull everything down? And where's the top on the Russell? Probably. We're in a box on everything, and it doesn't look good, folks. Could turn around, but I'm concerned. I've been concerned, but my positions are much more protective than I was a month ago. The dollar, a little bit of weakness on Friday, but nothing major. But did have a mobile breakdown from a squeeze and a pocket pivot to the downside. And as you guessed, tilts up well above where it's been. Is it going to go up from here, or is it going to come back down? Well, it will be dictated by the market. And gold, which has been kind of a dog for a long time. That's not even good enough. Well, I put a monthly chart on. There you go. Gold, which peaked back in September 2011, has been really going sideways for a long time. Is it finally peeking its head up? Maybe. It's got to get above the 200 before I'm a big believer, although I did initiate some gold positions. Here's some gold miner ETF, very similar. And silver, not quite so good, but also a positive week. So markets look extremely weak. Next thing I look at is industry groups, 174. How many actually have momentum to the upside? 4. How many have momentum to the downside? I bet a bigger number. Well, short-term momentum is 12, but if I broaden that out to 5 days, I have 893 to the downside, and I think I add 1 to the upside. So let's quickly look at these. This is consumer products, Kronos Group. This is one that saved my bacon this week. And that I had a significant position. Why? Because everybody said Altria was going to take them out. And guess what happened? Altria did a 45% investment. I sold in the high 13s. And I'm out of it now. I may come back in. When I looked at the conversion of price, I think Altria's price is in the 12 to 12 and a half. So when it got up as high as it did, I thought it was a time to sell it. I may look to re-enter. The fundamentals are not great, except look at their revenue. It's millions, if not billions. Hard for me to get excited on this, except for the fact that Altria came in. That's it for that group. Nothing else in the group matters. Precious mining, lots of pretty gold stocks. I'll tell you that now. Hard to believe I'm saying that. Gotta like American Barracks. It broke out above the 200, went sideways, and broke out on Friday. Pocket pivots, bigger volume, mobile breakout from a squeeze. Look at everything green up top. AEM, Agnico Eagle Mines, breaking above the 200. Randolph Research, high. Well, it's not a high when you look at the big scope of things right above the moving averages, but notice it's above the 200. It's above all its moving averages. You've had a reversal of the death cross of the 50 coming up above the 200. You got mobile breakouts from a squeeze, pocket pivots, and kahunas. Is it off to the races? I don't know. That's Rand Gold. AU, this was the one we picked when I was at George's meeting. I think we were probably sitting there on the 11th or 12th. We were. And it's broke out this week as well. A little cheaper stock. And here's Kirkland, another one that's testing its August highs after having a very nice run. I think that's it on the non-index ones. Now, you could play this lots of ways. Right now, I'm playing the gold miners with Nugget. And it should look just like gold. We'll see. I'll get it up to 20. And there's JNOG as a 3X junior ones to the small side. These things have been garbage for a long time. Maybe it's different this time. Back, REITs, change index group. So I did see a lot to like here. Let's look at a couple of these and see. So these are defensive plays with interest rates falling. That's good for REITs and good for utilities. Ventas, we talked about this last week, said a nice run, 4.8% dividend. Simon Property Groups, these are shopping malls, sort of a cup handle. Is it breaking out here? It's with Liberty taking that 4.2%. Realty Income, kind of a leader right now, pays 4%. HCP, medical office buildings, near its highs, 5% dividend. American Tower, cell towers, broke it out and ran only a 2% dividend. Crown Castle, I like this one a lot, breaking out here, 3.6% dividend. You can see it's got very strong earnings. So REITs, as a rule, look strong. And let me just take a look at XLRE. Hold on a second. I continue to like the public storage companies. These are like the garages. This is PSA. That's an expensive one, pays 3.7. We've looked at CubeSmart over the last several years, and this one looks great as well, pays a 3.7. You could just buy the sector, XLRE, and lo and behold, it looks like a lot of these stocks. So yes, it was soft on Friday. So is everything else. I have to take that one with a grain of salt. Utilities, you'd expect them to be strong with this market. They've had a big run, and I showed you on TradeStation where they're kind of near the top of their range. So Nextera has been a lower left to upper right. Earnings are okay, 2.4% dividend. They own our local utility. First Energy, again, nice run up here, moving up off the 50 from a squeeze, 3.7%. AEP, a big run, 3.2%. Duke Energy, 4%. Exelon, 2.9%. These are expensive. In fact, again, let's just look at the XLU. They are a place to hide, and I guess as long as the market sells off, these will continue to be attractive. Look at the demand on the XLU. Compare that to something like the XLF. A lot of demand, but look where XLF is sitting here. I think that utilities are reasonable here, but they are getting expensive. Utility Networks Index. All right, here's Edison International. Lower in its path, sold off hard here, pays a 4.1%. Dominion, I like this one, broke above its movement at 200. Notice you got the 8, then the 17, 50, and 200, really setting up nicely. Coming out of a squeeze, pays 4.4. Not much in earnings per share growth. Consolidated Edison of New York, breaking out here, 3.5%. I don't trade a lot of utilities. The water utilities popping up don't have much growth rate, 2% dividend. Long base, 4 or 5 months and breaking out here. That's it on the upside, guys. I wish I could show you things that I could say go buy. Hard to see that. Now, again, we're in that trading range, and we may break up off the bottom. And if we do, at least for a few days, there'll be some buying opportunities. And then we'll run right up into resistance. But a breakdown below is going to give a lot of opportunities to the short side. Looking at my buy choices for the week, I think they're very telling. So let's just look at them very quickly. And I'm not going to even run through them except to talk a little bit about why I picked them. First thing is heavy on REITs. Why? I showed you why, because they're one of the leaders right now because they're defensive. Several precious mining. Wheaton adds to it as a silver company. Down in the dumps, a couple of kahunas. Industry group turning up, probably a low risk play. On the healthcare side, I picked two, ABEO and Momenta. Neither of them are great. Their charts just look interesting. I'm not sure I would even play anything to the long side without the market turning around. But here's a stock, despite the market selling off hard, looks like it's got a higher low coming in, a mobile breakout from the squeeze. Doesn't make any money, 600,000 shares, typical average, and it traded almost double that on Friday with a positive day. Something's going on with this stock. I want to show you something, TSR, which I talked about here as well. Tesaro reminded me of that in this area here. And then Tesaro had rumors come out about 2 months ago about a takeout, and they got taken out on Monday at $75 a share. Something's going on with ABEO. I don't know anything about the company. I can't tell you something that I don't know. But in a market that sold off hard, something stabilizing here, volume is coming in. This is worth watching. Tons of overhead supply to worry about. I'm not saying go out and load up the farm. It's one to keep your eye on. And Momenta is another healthcare company, biotech, and similar pattern. And again, four kahunas in the last 10 days or so, 2 in a row the last couple of days. A huge positive day on Friday, despite the market sell-off. It's on my list to watch. I'd like to see it get above the 50, but something's going on, probably deserves a little bit of research. That's it. This is not a great list, and I don't recommend you run out and buy them. Of course, in a defensive position, buying gold, REITs, and utilities may make sense. Now, what about the short side? I saw a lot that looked like they were setting up for shorts. And they're a mixture of communications, booking and Shopify, consumer discretionary, Amazon, Domino's looks horrible, Netflix looks like it's ready to go down, financials continue weak. A number of healthcare stocks made my list here, some industrials, and then technology. Now, obviously, I'm not going to short all of these on Monday. I'm going to see what the futures are, but I have to be prepared to go to the downside. So what I did is I started with a large list of potential shorts, and I started at the top, and I worked my way down. And what I looked for were stocks that are in a downtrend, moving up in towards resistance with recent sell signals. This is bookings, weekly downtrend, heading into resistance, has a sell signal on, and just had a fresh PPS sell signal. And then accumulate the ones that I'm interested in shorting over here. So let's look at a couple of them. Amazon. Now, Amazon, kind of like the markets, is almost setting itself up in a box as well. But it ran into resistance on the daily on Friday with a new sell signal. It's in a sell signal on the weekly. Support's not down until 1270, which is 350, 340 points away from here. I've got puts on my position, sold calls at the money to pay for them. And boy, I think Amazon is looking pretty sick, but I also know that Amazon has a tendency of turning around on a dime. Intuitive Surgical, this has been a NASDAQ darling for years. Now, I'm not ready to short it yet because it's sitting right here on above support. But if it breaks this support, I'm going to short this one hard, and I might start shorting it sooner than later. I think that this one is going to have competition in. I don't think its fundamentals will support its price anymore. Sherwin-Williams, the paint, on the daily, a new PPS sell signal came in on Wednesday. Look at the volume turning down in a squeeze. The weekly has a new sell signal. Now it's only got about 39 points to it, or 29, 30 points till it gets to its support. So this one may not run a lot, but Sherwin-Williams looked weak. Boeing. Love this pattern. Clear downtrend, ran right up into its resistance and broke down. New sell signal. Boeing looks so short. Abiomed, this has been a strong up mover. On the daily, a fresh PPS sell signal, weekly downtrend. Biogen IDEC, why I'm concerned about biotech. Right into resistance on the weekly and failed. Recent sell signal on the daily, coming out of a squeeze daily, weekly. Volume is weak. I think that goes down. CHE, Chemed Corporation, same story. Ran into resistance and failed on the weekly. Recent daily sell signal. Netflix, what's going to happen this year with Netflix? Earnings are out in a month, but boy, is this in a hurt. Downtrend with resistance here, new daily sell signal, and struggling on the weekly. Domino's Pizza, all right, just broke through support on the weekly. Volume is horrible, in a squeeze, new daily sell signal. In fact, this is one where if I put in a traditional HGSI chart, you could see Domino's just broke below its 200-day moving average. Mobile breakout from a squeeze with Phoenix's tell you the market's weak and a kahuna to the downside. Maybe one of my favorite shorts. Align Technology, wow. Stabilized and selling off again from resistance. Here's an internet bank, SBP Financial. I believe it's an internet bank. And I got a new sell signal on the weekly. And on the daily, these green dots concern me a bit, but this is one that had a big run up. Intuitive Software, again, failing at resistance on both the weekly and the daily, coming out of a squeeze. MasterCard should be strong right now, but boy, this doesn't look strong, failing at resistance in a downtrend. Apple, downtrend, failing at resistance. These green dots may be something to slow me down on the Apple side, but Apple looks horrible. Parker Hannifin, failed at resistance, new sell signal on the daily. Another technology leader in the past, Alexion. I probably wouldn't short it here. It feels weak because it's sitting right on support. I love this Q lines that are automatically driven on support lines here. I think that's probably enough to share with you. So I'll look at one steel named Nucor. Fail at resistance on daily and at the weekly, sitting on support on the daily. So I'm going to wait to see if it breaks down before I do something. But this is an ugly market. The market is made up of lots of stocks. The stocks look weak. So let me show you a few things that you might consider playing to the downside. If you are worried about financials going down, play FAZ. It's a 3x directional on financials. We're going to look at each of these in a second. If you're concerned about semiconductors being bad, SOXS. If you want to short the NASDAQ, but you can't go short, buy SQQQ. If you don't like the Dow, go look at the dog. And if you don't like the Russell, look at TZA. So let's look at each of these on their own. So FAZ is financial ETF, 3x bear, which means if the market goes down, it goes up. Volume is great. It broke through some resistance here. It's got resistance right here. If it takes out 1250, it will be in new clean territory and will go higher. So FAZ above 1250 might be interesting. Semiconductors, sitting right at resistance on the daily. So if it gets above 14, SOXS might be interesting. Short the Qs. I have a position in this one, a new buy signal. Notice how it traded down to support and then broke out with a high close doji on Wednesday or Tuesday because we didn't have a Wednesday. This one looks interesting. Dog goes up if the Dow goes down. Sitting right at resistance, so probably not yet. I'd like to see it get above that 60 area before I would get interested. And then small stocks, TZA, or ETFs that go up when the small stocks go down. The red dots here tell me it's gone a long ways. It's sitting at resistance, probably will stall here. So I look at a lot of things. What can I tell you? One, this market looks very weak. Let's go back and let's just talk again about the S&P 500. Are we going to hold here and bounce? And short term, that bounce is going to be up, a retest, and higher. That would be bullish. A bearish would be a break, a retest, and a break to new lows. This would be if we get back up to the top. So we've got one of those two things going to happen. I think you have to see the futures Monday before you can make a decision. If you're going to be long, be careful. Yes, buying contra ETFs is a long position that plays the short side. Those are good in this market. Gold, utilities are nice defensive plays. I get that. Be careful on your positions. Now, I am usually a bullish guy. Perhaps my bearishness will turn out to be a contrarian indicator. Be careful. Have a great rest of the weekend, and thanks for watching.